What's up, Incog family? How we all doing? I hope everyone's keeping well, keeping safe, and I hope everyone's trading safe as well. So, listen, quick little video here. I hope you guys are enjoying the content that's been released recently. This video, just a quick one about structure within structure. Okay, and how we don't need to complicate it, right? We don't need to complicate it. Just understanding expectation order flow and structure and what that structure looks like on a lower time frame to basically get into trades. Yeah, so cool. Let's get into it. So guys, let's just imagine this is your higher time frame. Okay, so we're putting a few things together here, right, that you'll be able to find in this channel. Okay, you'll be able to find it pretty much, if you look hard enough, you'll be able to find it on YouTube, right? So we have a breaking structure here, meaning we had this initial low, which is taken out by this high, okay, and I've got this low now. So after breaking structure on a higher time frame, or on any time frame for that matter, what do we expect based on expectation order flow? We expect a pullback. And then what do we expect? We expect an impulse to go ahead and break the structure. Now, this doesn't always need to happen, right? But this is our expectation order flow. This is what we traded, okay? Now, this single leg of price on the higher time frame will look something like this on the lower time frame. It will look like a series of lower lows and lower highs. Yeah? So now, we've seen that breaking structure here on the higher time frame. What we want to now try and do is try and play the higher time frame expectation order flow, which in this instance is a pullback, right? So what do we need to see? Well, we can scale down to our lower time frame and wait for structure shift. Wait for structure shift. So in this instance, in our lower time frame, we've got this high, which took out this low and created this low, which is fine. So then when we see something like this, this is now telling us, right, price is now potentially starting to pull back. So that's when you can start to look to get into entries here. Now, this is quite aggressive because we've only had that one break of structure. There's absolutely nothing wrong with taking this trade, right? Absolutely nothing wrong with taking this trade. Just accept the risk, right? Then when we see this mitigation happen, followed by another breaking structure, now we're talking, we're starting to build that demand chain here, right? We're starting to build that demand chain, and we just keep following this up until when? Well, until we get into a higher time frame premium. Now, I'm not saying you can't buy from in here or anything, but I'm just saying the probability will be stacked against you rather than in favor of you. Why? Because we're in a higher time frame premium. What do we expect to see based on an expectation order flow when we get into premium? Well, we expect price to then put in a new low, right? Based on a higher time frame standpoint. So I'll draw that like this. So based on a higher time frame standpoint, this is what we expect to see. This is what we expect to see. Now, like I said, that doesn't always need to happen, and I'll show you a perfect example of that. Now, when we now see structure shift again, so breaking structure, we can now start to look at getting into sell positions, following that higher time frame expectation order flow. And this is how you just follow structure. Understand what phase in the market you're in on a higher time frame, then use the lower time frames to capitalize on that. Yeah, so let's look at a couple of examples, and I'll then leave you guys as usual to test it and see what you take from it. So guys, listen, just before I move on, if you guys like the content on this page, give it a like, give it a share, and if you've not already done so, subscribe to this channel. And let's get back to the actual important stuff. So let's just have a look at this recent price action on EU. So we had this high, I'll use this. We had this high, which essentially broke this structure and printed this low here. Now, from an expectation order flow standpoint, what do we expect? So at this point, we expect price to pull back. And maybe somewhere here or from the extreme, we expect that new low to be printed. Now, like I said, that doesn't always need to happen. Now, I'll touch on this at the very end. Right? But we don't know that this is going to happen. We don't know that we're going to end up breaking structure and continue bullish. We don't know that. Okay. Now, there are things that you can use, which I'll speak about at the end of the video, which you could potentially suggest that can happen. Yeah, but we don't want to overcomplicate it. Right? We just simply picking a time frame, so a high time frame, whatever that is. Right? So in this instance, it's H4. Right? And you're simply waiting for that pullback, and after that pullback, you're looking to continue playing the shorts, right? Based on the expectation order flow from your higher time frame, which in this case is the H4, right? So I'm gonna take price back to here. And we're gonna start from basically right at this point. Now let's just use the 10 minutes. Let's use the 10 minutes. So we have now seen this swing high, break the low, and create this based on higher time frame standpoint. Now look at what that looks like on the lower time frame. It's a series of lower lows and lower highs, right? Some are bigger than others, some are small, whatever it is. It's a series of lower lows and lower highs. So if we just zoom in, what do we want to see? Well, we want to see a breaking market structure. So in this instance, we've got a breaking market structure here. We've got a breaking market structure here in the 10 minutes. Now that's potentially suggesting, okay, price is now ready to pull back, right? And it's the same concept. So from here, when we're buying, we want to buy in discount. Now let's say, I'm not going to go too much into detail with entries and stuff. Let's say you just place an entry here, you might get taken out, might not, whatever it is. Yeah. Now remember, you can also scale down to get your entries. That's fine, whatever, right? But let's say this is your first opportunity to get into buys, right? Then what we're waiting for? We're waiting for that trend to continue on the lower time frame. Then we get another breaking structure. And what do we expect? Same thing, right? So this low create this high. And what does price do? Price comes into somewhere within discount, and off it goes. Now, this is another lesson that you guys can take from this. So this low created this high. What we're expecting? We're expecting a pullback into discount. Now in this instance, it's not a deep pullback, right? It didn't get into your discount zones. So don't force trying to buy in a premium. Don't force it. Just wait for the next structure. Just wait for the next structure. So what happens after that? Well, we have another breaking structure. And you just keep following this and keep following this, right? Until, so again, this low created this high, and we come into somewhere in here, and off it goes, right? Again here, same example as this. So this high created this high here. Let's just call this a high. Some people might not call this a high, which is fine, right? And we actually do come into somewhere here in discount, so you could potentially take that trade. If you're waiting for the extremes, then your trade for you completely fine, right? Just wait for the next structure break. Just wait for the next structure break, and just keep doing the same thing again and again and again, right? So this high, this low, create this high, and we come into this little POI in here, and off it goes. Now, always understand and know where you are relative to the higher time frame. Yeah. And the reason I say that is because let's say we continue doing this, right? And we then have a breaking structure here. And you basically had this low, which put in this high, which is fine, right? And you're looking to buy from here. I'm not saying you can't buy from in there, but this should not be a surprise. Yeah. Now, I'll go back to the higher time frame just to explain something that I've already explained. why is this low probability? Because now we're within a higher time frame premium. So at this point in time, right from the extreme or from this POI in here, we should technically be looking to sell. That's going to be your high probability setup, following the higher time frame trend. Yeah, following the higher time frame expectation order flow. So I hope that makes sense. Very important lesson. Okay, little things here. So at this point, we don't want to just start selling straight away. We don't want to just start selling straight away. We want to just be patient and wait for the market to shift again. We shift, right? We get that breaking market structure. So from the high to the low, price comes back into somewhere within the premium now, because we're looking to sell, and off it goes. And then again, we see that continuation, which breaks structure from here to this low. Price created this low, and we come into somewhere in here, and off it goes. Now, this is just thing. I did do a video on picking out order blocks, right? And this is a perfect example of price taking out liquidity, breaking some sort of structure, being engulfed. Okay, it's no surprise that we get a reaction from there. Now, based on an expectation order flow here, we do expect to see price take out the low. Doesn't always need to happen, right? Doesn't always need to happen. Yeah, and also remember, from a higher time frame standpoint, if it loads, we still have the extreme which price could come into, right? We could simply use all this as liquidity to come into the extreme. It's completely fine, and that's exactly what happened here, right? Now remember, this is the last point that price can basically gather enough liquidity, enough supply to now go and print the new low. So let's see what happened. So from a 10-minute standpoint, same thing again. So we get there. What do we want to do? We want to wait for a structure break, right? We want to wait for a structure break. When we get that, we want to sell in a premium. So price comes into somewhere in here in the premium, right? Somewhere in here in the premium. We sell off. We don't quite get a break of structure, right? But we create cores here. We create cores here for lower prices. And what do? We actually come into the extreme. And we get that breaking market structure, right? And then you follow the same thing here to here. We expect a pullback, continue lower, so on and so forth. Now, of course, you're going to use even lower time frame. Okay, if that's part of your plan to get into your entries, to get a bit more accuracy in your entries, that's completely fine. Okay, we're just simply speaking about structure here. Yeah. Now, I did say, so from a H4 standpoint, so I'm just going to clear all this. It's our expectation that price comes into one of these zones, gathers enough supply, and breaks structure. That's the expectation of order flow that we're following. Yeah, doesn't always need to happen. Price then breaks structure here on the H4, and this is where we are, right here on the H4. So we simply, literally, would do the exact same thing, the opposite now, right? We look to sell into our buy zones, so on and so forth. Yeah, using a lower time frame. Now, why did this happen, right? Well, if I jump up time frame, so let's just look at the daily. It's the exact same thing, guys. From a daily standpoint, we had this high, which broke structure, created this low. What do we expect after breaking structure? We expect a pullback. And then from here, or from the extreme, we expect to see this from a daily expectation order flow. Right, now I don't want to complicate it further, right? But this is why basically we've seen that breaking structure on the H4. Yeah, but keep it very simple, guys. Understand your expectation order flow. Right? Understand your expectation order flow. Understand what phase you're in relative to your higher time frame. Now, your higher time frame might be the daily, might be the H4, might be the 1 hour, whatever it is. Understand what phase in the market you're in, and use the lower time frames to trade basically according to that phase, according to that expectation order flow. And keep it very simple. So like I said, guys, keep it simple, right? Understand your higher time frame, understand what phase in the market you're in relative to your higher time frame, and use the lower time frames to trade accordingly, or to get into high probability trades. Yeah, so that's it for me today. I hope you guys took some value from that, and if you guys have any further questions, just let me know. And other than that, take it easy, and I'll see you all in the next video.